So this is the thing about Tesla. I mean, one week we're feeling a little down and all of a sudden some big news comes and falls in our lap. So today, breaking news, we had BP announce that they're going to invest $100 million on superchargers with Tesla. Today, we're going to ask the bulls here, how do they feel about Tesla? What are the things they love about it? What is it that they don't love about it? Welcome to everybody. This is Alexandra Mertz. We have Jeff Lutz and we have Xander Sky. Let's talk this news about BP and the superchargers. Alexandra, what was your thinking about this? Is this a big deal?
It's nice to have. I don't think it's that big of a deal. I was starving for good news, so I'm taking everything and anything. But I found, this is a bigger deal for BP than it is for Tesla. Why that? What choice does BP have? Their station owners are not happy chaps. They know darn well that ICE is gonna at one point not exist anymore. They invest in these stations for a long horizon, not for a couple of years, but a couple of decades, and they know it's gonna go down. A gas station owner makes his money mainly not on gas, but on the snacks and car accessories that they sell. So by having EV charging stations, they hope to capture the ever-growing number of EV drivers so that during the charge time, they come into their shops, they use their restrooms, they take a coffee, they buy some snacks, and they look at car accessories and buy those, maybe even a lottery ticket or whatnot. So for them, it is a bigger deal because they're actually re-increasing or hoping to re-increase their TAM. And they have to manage their station owners, right? Because the resale value of these stations was going down a lot. I'm actually, I'm quite close to this market. I had a lot of owners, especially around 2015, that immigrated purchasing gas stations, and that number has decreased significantly. There are hardly any immigrants who want to buy gas stations anymore. So all that to sum up, what choice did BP have? If they wanted to have superchargers there, be able to package them as being theirs, which is obviously their objective, have the only one that everybody's going to adopt to now, they had to go to Tesla. 100 million is nice to have. I mean, but won't make a big leap in Tesla's financials, but it's one of those mini milestones that had to be done. So yes, we have another item on the list that we can tick off. Now the gas stations are coming this way as well, and it's nice to have. Personally, I'd rather have them in front of each Target or whatever, but that's a completely different discussion we may have a little bit later. But I just feel like, I want to go somewhere where I can do something during the time of the charge rather than go to a stinking gas station.
Okay, so I'm going to have to rebut you because I think it is a massive deal. So you have to look at it in a different context, right? So we're not talking about the $100 million. Is that a big deal to Tesla? It's not about, is it a big deal for BP or... Really, it isn't from that perspective. But if you look at it from the two perspectives I'm going to share with you, one is that this is a partnership between an oil and gas conglomerate, one of the largest in the world, basically partnering with an electric vehicle company to provide superchargers because they know that gas stations is going to die. And so it's a signal that they need to do this, or we just talked about it, gas stations are precarious, they don't make a lot of money. And as there's an exponential curve of EV adoption, at the same time, you're going to see an exponential decline of gas cars and gas stations. And so they're already seeing the signs in the wall here, and they need to do this now. Secondly, this is just a tsunami of partnerships that's going to come. This is the first. So just like we saw with the supercharger partnerships with the OEMs for Tesla, we're going to start seeing not only gas stations, we know that we heard Hilton say this, now you got the BP, you're going to hear all sorts of partnerships, Walmart, Costco, Disney, right? Everybody's going to now need to partner with Tesla to be able to provide this. So I think this is a symbolic scenario right now, situation right now. We're just at the beginning, but this represents the capitulation of oil to EVs. Then the other thing I was mentioning to you was you also have to think that, okay, our group here, we listen and we know clearly what's happening with electric vehicles, but the general public kind of still don't know, right? At this point, it's only 5% of the market have bought an electric vehicle. They know it's kind of there. Many still think it's a niche. But when they hear that a gas station is partnered with Tesla, that's all they need to hear. it's another kind of solidification of who Tesla is and what electric vehicles mean. So I'll ask the folks here what they think too, but just to put everything in kind of in context here, this is what happened this morning. There was an announcement that BP is going to, buy $100 million of superchargers. They are going to put it into their gas stations. So this Amoco, Thornton's branded sites, Travel Centers of America locations. They're large giga hub charging stations, which are near airports and major cities. And this is, they're going to have the fast charging network put in there. And it looks like they've already did this in 2024. They already started rolling out their own chargers: Houston, Phoenix, Los Angeles, Chicago, and Washington. But now, what am I going to say here? And so this is part of their. They had reserved $1 billion of spend that they were going to do, and this is $100 million worth of that. What do you guys think, Jeff? What's your thoughts on all this?
Yeah, I'm in the camp of this is the first of many, and I think we'll see more announcements. It goes back to the core of Tesla Super. Think of it as a product. And think of it again as a major win in unit economics. Tesla has been transforming the design of the supercharger for more than 12 to 15 years, and they've been working on how to take something called the total landed cost. They've been working on how to take the total landed cost of a supercharger down. That's from a bucket of components to a charger operational on a site. And that's very important because now when Tesla goes to bid, whether it's a government contract or where it's private contracts like this, they're coming in anywhere from 3 to 5 times better than the competition. And it's not only in cost, it's performance, it's uptime, it's the software that Tesla has in terms of monitoring these stations and connecting them. And just think of all of that. Like at some point, these 100 million of superchargers I'm assuming will be on some app that BP may want to promote, and just the number of revenue sources starts to become pretty significant. And the other thing, I think the other major point here is to start thinking about Tesla as a sum of the parts story, and you start thinking about the supercharger network, the engineering effort, the software that goes behind it, the mega packs that could at some point be connected to these stations as well for energy management or arbitrage. And you start thinking about the sum of the parts, meaning like if you were to break out the supercharging effort out of Tesla, is it greater if it was broken out versus what it's being accounted for right now in total Tesla valuation? I think there's an interesting story there. So first of many, and I think the sum of the parts story is very interesting on this. So I'm pretty excited to see this.
Okay, what about you, Xander?
I think you guys summed it up. I don't have much to add on it. I think it's a wonderful thing, and this is what's going to happen. I think as feedback for what you guys said, the one that sticks out the most is that gas stations realize and their owners need to find revenue streams because if gas starts declining. But I think it's early, so I think dominoes will fall in terms of adoption. You have to go where the puck is going, so makes sense.
Yeah, it's early, but I mean, this is the thing about Tesla, right? We are all watching the earnings, we're all watching the sales and production delivery, but these partnerships come, and they're going to continue to come. And sometimes they're going to be a big hit to the stock, and sometimes not, but they will keep coming. And there will be more of these partnerships. And then at some point, it's one of these, just like what happened to Hertz partnerships, right? That's going to happen. So I know that, Jeff, you've been kind of hoping and thinking that there should be an FSD licensing partnership. That could be a big one. Is there any other kind of partnerships you guys are thinking that might actually be around the corner?
I don't know whether it's around the corner, but I think the EV powertrain partnership is going to be the most substantial one, because that will show two things: that OEMs are capitulating. I think actually they are. We've seen a lot of news, and Jeff is much better informed than me on that side, about OEMs either delaying further developments, not having the money for it, finding excuses to push it out further and further. Not only US OEMs, also European ones, and how brutal they find this current phase of their EV developments to be. So there will be the first one who will sign up not only for the FSD and operating system, but also for the EV powertrain. And that is, for me, the major one I'm waiting for.
Okay, and Jeff, are you still thinking FSD licensing might happen?
Yeah, I do. I think it will happen imminently, and I agree with Alexandra too. The powertrain, the motor, the inverter piece of it, and basically the full powertrain. Tesla has a performance and cost advantage on that, and as OEMs are thinking about what are the barriers to getting an EV that's greater than zero margin, that's one of the barriers to it. But I think FSD licensing will be another one. It'll be a tricky contract to do, but I think it'll have very many sources of margin for Tesla, starting at the engineering effort, and then including software, and of course selling of the hardware, and then some ongoing services piece of it. So I think Tesla's positioned to be not only a manufacturer of vehicles and also of services that are going to come on these vehicles, software and services, but also a major technology and licensing partner to the rest of the industry. I think that has big implications for revenue margins, as well as kind of their position as it relates to governments and so forth. So anyway, yeah, FSD licensing to me is imminent.
I wanted to ask you guys this question. Okay, so we just covered, BP partnering with Tesla, right? And then we're going to talk right now about Stellantis, one of the largest automakers, partnering with a Chinese automaker, Leap Motors, and this is happening. And I can share with you exactly which car companies are partnering with Chinese car companies. But back to that, before I cover that story, when do you think that an automaker is going to have to, you just said the powertrain, but actually just bigger partnerships, just like these guys are doing investments. Tesla might be too big, right? They may be too big of a company. These are small EV startups still.
Exactly. I think purchasing 20% of Tesla, they can't, right? I mean, if that's just impossible. So that's why I think it's much more going to be licensing deals. Now, the Stellantis deal was, if I recall it right, was last night, $1.6 billion. What would you get for that price from Tesla? Nothing, right? We have a market cap, I don't know how much it is today, 750 billion. So 1.6 billion is not going to get you much. Also, these Stellantis, and a couple of weeks ago, Volkswagen, let me try to do it. Volkswagen purchasing 5% of Xiaopeng. I promise I'll train myself. So Xiaopeng and now Stellantis purchasing 20% of Leap Motors is those are signs of them actually capitulating to the Chinese market. They had hoped with their models, notably Volkswagen, of course, to remain relevant in China. Remember that actually in 2022, Volkswagen was the brand who sold the most in China cars, right? But they know very well that with the EV adoption there, which is above 20% now, their way of staying relevant there only will be possible by associating their names with Chinese names, just because they have not made the effort on software and they have not build up sufficient goodwill for the image there on the EV side. So though they are in a tough spot, and for them, to get associated with Tesla, other that they can't afford it financially, is not going to solve that problem. They know that Tesla has a place in the Chinese market that they can't jump on anymore. That's not possible. So the only way it could be is by Tesla Inside, right? And I don't think they want to associate themselves with Tesla Inside for the Chinese market. I think they want to associate themselves with Tesla Inside licensing deals for European and US market.
I don't know. We have to talk about which car companies might want to do that. But let me share what's happening with Stellantis. So they just announced a partnership with Leap Motor just a few days ago. This is Leap Motor. So they have 3 electric vehicles that are currently selling in China. They're not exactly the big one. They formed in 2015. So they've just been out there, but they look pretty decent. Look at these cars. Visually, they look fine. And they partnered, they created a joint venture, 51%, 49%. And this gives Stellantis the rights to export and sell these vehicles globally. So it looks like that they'll let Leap Motors sell it within China, but then they can now sell it globally across. So this is a partnership. I think they've been forced to do this because they just don't have an option. Many of these European car brands and even American ones, they are not selling in China. They try to, but they're just the numbers are dwindling. And so, and then their own EV efforts are struggling. And so they partner with an electric vehicle partner in China, and then they sell globally. It's another sign, just another one.
Yeah, and the next step may be that what happened with Volvo. Remember, Volvo was purchased by the Chinese Geely, and then they built in China. And now, actually, yesterday they announced that they are going to remanufacture in Europe. I mean, first of it is obviously that the European Parliament is trying to make sure that these cars are built in the European Union rather than imported, but there are different stages to it, and the Stellantis stage is now inserting themselves with this 20% stake in the Chinese company. The European and Chinese way of trying to navigate this very complicated period for the Europeans is probably a good example what may happen with the Americans. I feel the Americans are 1 or 2 years behind the Europeans in the pain curve, and may watch very closely what's happening here.
Yeah, I have a different take on that with China. You start with this Leap Motors piece of it. I think it's interesting. I read through the deal and the promises, kind of going back and forth. But unless Stellantis has an EV operating system, and unless Stellantis has an automated way to build Leap Motor product in Europe and the US, the cost structure isn't going to work. Now, I know that probably from an import-export perspective, they're probably going to say, okay, they're probably going to try to strike some deal like Volvo and Geely have, where Polestar cars are made in China and shipped over here because Volvo has plants here that export, and then they offset those credits. Not to get too wonky, but I just think at a high level right now, I'm going to be surprised, let's put it this way, if Chinese domestic OEMs truly in a long-lasting way, like a meaningful way, actually penetrate the European and US markets. I think they're going to struggle, because if you don't have a ubiquitous operating system that everybody understands and recognizes, and you don't have the ability to manufacture locally, and you're not allowed the ability to import for very long, I just don't think the economics are going to work. So, and those are 2 very, very difficult boxes to check. So Tesla's been able to embed themselves in China fairly early from an EV auto perspective, and they've been able to localize their operating system. So basically Tesla has, when somebody sits in a Tesla car in any country in the world, everything's localized, everything works, regionally, everything operates with all the local laws. The operating system's understandable to the person inside of it. That is not easy to do, and that's not something you can do in short duration. But the other big piece of it is just localizing manufacturing to that area. So the Tesla could have just built in Fremont and imported like they do Model S and X, but then you pay a huge import duty to get product into China. And So I'll just leave it there. I just think the Chinese are going to struggle to export globally, and I don't see it happening in volume. I think the European Union is really going to push back on this, and I don't think the U.S. from a regulatory perspective is going to allow it in volume. Now they are allowing it for certain types of vehicles. There's BYD buses in California, by the way, but those are actually manufactured. Those are actually final assembled in the U.S.
Yeah.
Not a lot of people know that. But anyway, I think for the auto market, I think they have technological challenges and they have regulatory challenges. And if you would have said the same story to me about smartphones maybe in 2015, I would have told you I think the Chinese are going to figure it out because there's actually less regulatory hurdles. Some of them got stopped in doing it, but many of them were able to break through, and it's more doable.
I want to add one argument to your arguments, that is distribution. So, I've been looking a lot at these Chinese brands. So what they're trying to do in Europe is actually partner with other brands to have their Chinese brands added on a Kia dealership or on a BMW dealership and whatever. Lots of those dealers actually have now non-exclusives and so can add other brands to it. And that proves to be a big hurdle because these dealers want their margin, right? So suddenly these cars that were supposed to be so cheap and so competitive are not so cheap anymore because they have to fulfill the hopes of these dealers if they take the brands on. And often that goes with initial margin promises. Otherwise, the dealers are not gonna go there. And the last, and again, I don't have all the solutions for this, but they are trying. What clearly is the point is they're trying, and they have state money behind them. Profitability, while Tesla was always struggling to survive and building this all up. And I mean, if you look backwards, I know I never want to look backwards, but if you look backwards 10 years, how Tesla built its today's dominance and how all these domino pieces had to come together, be it the supercharger network, be it the way they distribute, be it the fact that there are no dealerships, be it that there are service centers. I mean, there are so many pieces to it and they're in place, right? And all the others are still struggling with them. So where I wanted to go is the Chinese are trying. They don't have the same stress of profitability there because currently they can still go back to the state and hope for subsidies and help from the Chinese governments. The second point is how could they possibly conquer the United States? At the moment, there is no way coming in. Trump put those tariffs in and the Biden administration left those unchanged. So at the moment, they're not even trying to come into the United States directly because there's it just doesn't work economically, but they're building up Mexico in big way. So I'm currently doing, trying to find my research, how they're entering the Mexican markets with Chinese cars to sell the Chinese cars, whether it's through dealerships or however they're doing it, because you have to know that obviously between Canada, the United States and Mexico is a free trade agreement. So if you enter one of the three, you usually are allowed to sell in the two others. So that's their trying to do the Trojan horse. I mean, I see you're septic, Jeff. You probably know much better than me, but there's clearly the will to do it. It's in the last Motor Trends. I mean, I'm not a huge fan of Motor Trends, but I watched this one. They are on that as well, trying to understand which Chinese cars are going to be sold in Mexico next.
Yeah, they
Why
were.
were
so-
you shaking your head?
They won't
ahead,
be.
Dan.
I mean, so. Oh, sorry, Xander. Go ahead.
I was just asking, why are you shaking your head?
Me?
I'm shaking my head because I agree with the line of thinking that Alexandra was going. The U.S. government is going to they're not going to allow the free trade agreement between Canada and Mexico to just have like the Chinese just come in and under the dead of night, create an entire supply chain and just start, moving product over the border. Now, of course, we've been surprised with how the issues get managed, between the two countries and other aspects. But I don't see this happening. I think you have two things that are diverging here. You've got the viability of the U.S. auto market, like the financial viability of the U.S. auto market, and then you've got this Chinese EV market, growing. They clearly want to export, so I agree with all of that. It'd be the worst decision, one of the worst decisions any president or any administration could allow, for a diverging U.S. auto market to allow China just to have product flowing in, through Mexico. So they're going to, China is going to be able to expand in ways in Mexico, and they're going to be able to probably serve that market. I don't think that's the issue. And Tesla suppliers, Tesla will have many suppliers that supply product in Shanghai. They'll set up in Mexico. There'll be U.S. suppliers that set up down there too, and there'll be Mexican national suppliers that set up too. But in terms of a Chinese brand just setting up in Mexico and just being able to drive cars over the border without a massive import duty, I don't see that happening. I would be very shocked if that happened.
Okay, so a few points about this. Number one, we should not underestimate the Chinese automakers. They're backed by the government. Elon himself has said that the Chinese automakers is probably, the biggest competitors to them. Having said that, I just interviewed Nick Colas, and that interview will drop on Sunday, and he blew my mind. You guys will have to watch this. This is an amazing. He just dropped so much information. Nick Colas has 30 years of investment research, financial analyst background, but he also has an auto industry background. He helped Chrysler come get out of bankruptcy, and he helped Chrysler also years later to do the merger. He actually also was the person who helped do the very first IPO of one of the very first Chinese auto brands. It was a minivan. Anyways, he said he did not think that the Chinese automakers are going to be able to go global. And you need to go global, like the way Hyundai did and the way Japanese brands did, in order to get a foothold and to be able to be a competitor. And so the conversation we're having right now, a week ago, I would have told you there's no way China's going to be the next big, competitor to Tesla. They're going to be global. But now I'm wondering as well, based on the points you guys are making. So
they're going to be big. I'm not saying they're not going to be big.
Right.
It's just the going global means, software distribution and the ability to manufacture global at the right cost structure. And I don't think they're checking all three of those boxes, and it's not clear, what the path is, but maybe over time. But I think the fourth box will be regulatory. And I think it's just going to be, it's going to be very difficult for them, but I guarantee you they're working this very hard in the background.
Jeff, can I ask you a question, please? Because I have no idea, and this may be completely, naive as a question. When Apple had their operating system and Android came upon, Android was second, right? The Apple system existed first, or did it happen simultaneously? And how did it become the second standard? Because I'm asking myself, do the Chinese, do they let all these startups, work on operating systems, and then just at one day the winner will be there and that one will be generalized? Is there a possibility that, the winner takes all of the competition and it might be Chinese? I don't see anybody, I'm looking into Swiss software, I'm looking into European software. I don't see anything that's even coming close to it. While in China, there seems to be a couple, also because of lots of copycats and whatever. But do you think that is possible? An emergence of a second operating system that is just the winner that suddenly emerges there?
Yeah. So to answer your first question, so iOS started on like the iPod, and so before there was an iPhone, Apple was developing this iOS, their operating system, and then they've expanded it to multiple devices, phones, tablets, and so forth. But in terms of like starting it on a phone, they were pretty close to each other within a year of them both basically getting to scale in the called the 08 timeframe. And so they were pretty close. So it was, basically a 1 and a 1A in terms of timing. Again, putting it on, answering the question on mobile phones. But yeah, I think the operating system piece is going to be the issue. I also have some pretty direct knowledge of this as well from talking to one one of the major Chinese players there from a kind of a prior engagement. All I'll say is that this is something they're thinking about, and they don't have a good solution yet. They need something like like an Android or something that they could actually produce hardware on and then be able to ship it. That's what the Chinese OEMs are using. They're using for smartphones. They're using open source Android, and then they're kind of putting their own wrap around it. But on the vehicle side, they don't have that piece. I keep going back to the other piece of it is most governments. So the U.S., South America, India, and I believe the European Union will here soon. Are going to require local manufacturing. So when you take, they're not all painted the same way, by the way, but take BYD, for example, they've come out and confessed that they're highly manual in their approach to manufacturing. You take that labor rate in China, and then you take a highly manual system and try to import it into the European Union or in the US, and you've got something where the unit economics break.
Yeah.
Yeah. So there's that piece of it. The third piece of it's regulatory. So that's where I think there's going to be a tough road. We haven't even ventured into the reliability piece of it, the safety and reliability piece of it. It wouldn't be okay to just speculate on that. Maybe they're making great product, but in the consumer electronics world, eventually they had to figure that out in order to survive in global markets where they can build product that would survive the 1 to 2 year warranty period, depending on the region. So I just don't know where they're at from a safety and from a reliability perspective in auto. We don't get those numbers.
Can I reply to that? I'm sorry, I'm imposing myself again. So 2 days ago, we had 5 Chinese cars imported into Europe, who all 5 got the 5-star rating. I have a post on that, so you can look that up. So I think the safety aspect, they know how to manage it. And so that one I'm less worried about. I think, where we will be in 5 to 10 years is traditional car makers will purchase the operating system from one of the providers and will purchase the electric power train from another one. And I obviously hope that Tesla is the star of both of those. And I think they're the only ones who will be able to provide both at a high margin. Now, will they be the only ones? Probably not. So what would be a competitor? And I think that's where the Chinese come back into play. They may not sell everything under their Chinese brands, but they may sell, like today, the 40,000 suppliers to Volkswagen. They may be one of the tier 1 suppliers. So they're replacing other tier 1 suppliers. Now, on the operating system, I'm sorry, I'm going to nail you a little bit more. So Android, the Android of the operator of the car manufacturer, could that be one of the big US companies? Like, could that be, was that the ambition with Apple Car, or could Google be still one of those? Or do you expect that to be Asian?
I'm not sure I understand. Are you saying that someone could develop a ubiquitous operating system for EVs, for autos, and then sell that to companies?
Yeah, be the provider for that. Be the tier 1 for that.
I mean, it's possible. There are players in that space, but you're really going to struggle in terms of the various software components, because you've got the control system of the car, and then you have the infotainment piece. So they may be able to get a lot of the infotainment piece down, which basically Android Auto and Apple CarPlay are doing a lot of the infotainment piece themselves. But in terms of the control of the car, that's where it's going to get a little bit difficult when you're not doing the whole thing end to end internal to the company like Tesla is doing. So is it possible? Yeah, I know there's been discussions in this space. I don't think they're too far along. I don't want to just hang on the software piece of it. I think the manufacturing piece of it's pretty big, but I think the software piece of it is equally. This is why they've known they've had this ambition to scale outside of China and to scale exports outside of China. They're just starting to do it. We don't really have a good understanding of what the sales are and what the resales are, and is there good recommendation, word of mouth of these Chinese? We don't even know. We just know like they're coming, But I'm just looking past it. If they don't have that ubiquitous operating system, I think it's going to be very difficult for them.
When we compare, the Apple iOS system and the fast follower Android to Tesla, and who's going to be the second that's going to be kind of ubiquitous, there's one big difference between what happened. And the big difference is that Apple decided to be a closed garden. They did not want to license their app. When they released the iPhone and they showed the brand new iOS in 2007, Android copied it very quickly. Samsung, as a hardware maker, adopted it quickly. And in a year, they launched it. And then Android became the ubiquitous software for the other non-Apple people, and they didn't have a choice. So everyone else adopted Android, and now you've got Android versus iOS. What's going to happen this time around is you've got the Chinese, and now you've got the SAIC partner with Audi, you've got Xiaopeng partnering with Volkswagen, you have Leapmotor partnering with Jetta, Leapmotor now partnering with Stellantis. These things are happening because these automakers, European or American, they're struggling, and so they need to partner with China. The difference this time around is that Tesla is very open to licensing their software, and they're very open to creating software, to license their FSD, to even help them build powertrains and build their factories. And so I think that, there might be an opening, and there probably will be, and that's why you're seeing the Chinese are being approached. But at some point, we're going to see partnerships with back to Tesla because Tesla's willing to do this, whereas Apple wasn't. That's, I think, a very big difference.
I have a question. Oh, go ahead, Alexandra. Did you want to say something?
No, I saw Jeff shaking his head. I want to hear him out.
Go ahead, Jeff.
Well, that's because Jeff... What? Because Jeff was part of the reason why Android succeeded.
I'm waiting. I'm waiting. This Android copied iOS. Where did that come from?
What the? Okay, I'm the Apple, you're the Android, so that's why we're gonna.
I like them both. I mean, there's good points of it both, but I mean, Android started in 03, and then they transitioned. They started working on a mobile OS in 05. So I don't know,
dude. There's a difference between a keyboard than what they showed in 2007, which is, touch screens, and that's like a total.
Apple didn't invent touch screens. I can take you through the history of that.
I know the history. I know that where Xerox PARC. I got all that. But come on, don't tell me that we're gonna go down the other path here. But don't tell me that the iPhone was not a revolution, dude. That was absolutely.
I didn't say that.
Okay.
Very great product.
They're a great product. Sorry, go ahead, Xander. You had a question?
Yeah. So an interesting counter I heard from someone refusing to adopt EVs was like privacy. Is there any consideration that you guys have given to, trusting the software provider of the cars?
Isn't that a similar issue with the phone? With the phone, is your data completely safe? Do they know where you are? Can they track you? I think I saw this morning on X that in China now you can enter into concert spaces or football stadiums or whatever just with the palm of your hand. You don't need to show a ticket or a phone anymore. It's just the scan of your hand now. That's where we're going.
Amazon,
do I like it?
Amazon's
I don't.
Mm-hmm.
Yeah.
Okay, this is fun. Okay, so we've got partnerships galore. I still think that you're gonna see many, many more partnerships coming along. That's exciting. So let's talk about Tesla again. And I think what we want to do is cover the next topic, which is, what do we love about Tesla, but also what do we not like about Tesla, what they're doing that we don't like. Let's go down the path here. Xander, why don't you start off? Just tell us what you're thinking about this, because I know that, you really are somebody who's capable of looking at both sides, and you're not just completely just enamored necessarily. So what's your position here?
What do you mean? I'm their leader, and I love Elon.
No, you are, but right. I mean, like you just last week in the show, you said that you're willing to sell Tesla stock. It's not like you're willing to choose, do it objectively as opposed to just saying, "Oh, I love this company, therefore I'll act this way." That's what I meant.
Yeah, I think short term is is something that needs to be considered if you're trying to grow a position versus, long term. You already built out a position. Maybe you're up. It's a much easier to stomach these downturns. So I love that the company is thinking everything through and being very strategic about their decisions. They essentially built a moat now with the pricing. So if one considers that, they're forcing the competition to stay small because they can't make any money. So I like that part. I don't know if I don't like things about Tesla. I was trying to think. It's all short-term stuff that like I do. Like on earnings calls, I'm not sure why we're going into, I think this is Jeff's point, like macroeconomics theory and advice. So I think like that part it could be cleaned up, but I think it's a teething, growing pains kind of thing. And then it's just like right now for me, the stock price at like 206, it's and today we closed below it. So if we don't close out the week, if you look at the weekly chart, the moving averages have converged to a support level. So the 200-day moving average and week, the 200-week moving average and the 50-week moving average are at a crossing point. They're both at like 206 or so. And then if you look at the the previous action around the price, that 206 number was kind of like a resistance level, and then it became a support level. And there was once we dropped to 100, you saw a lot of action kind of happen between this 150 to 200 range. So if bad news and especially macro happens, I just want to be prepared for that. And the people that are asking about, like, I had someone ask me how I learned technicals. It's just YouTube videos and looking at the price action and understanding that there are buyers and sellers in a larger amount at a particular price point. Then decisions will be made there, right? Stop losses will be triggered. So I think. I know this got a little tangent, but I did want to talk about that stock price and just being prepared. I think if you're a long-term, investor, 2030 looks great. I think that's the part that I really focus on, and when I'm, deciding whether to sell any shares, that's just all market timing. So I've never done that before. This last one, where I knew it that we were gonna come down based on the Wall Street reaction of short term. So, but it's a difficult thing to master. So I don't encourage that. It's most of the time you can see it. Like my kids invested. We don't touch it. I don't even think about trying to time it, and they have outperformed me by a lot. So if there's anything, it's just focus on 2030 and focus on where the company's going, and the short-term pain will, hopefully be okay if you don't need the money. So.
Okay, so you look at it from long term. You think that Tesla is doing great, but short term, sometimes they do things that may not be as great. Alexandra, what's your perspective? Mute.
I'm actually muting myself because I have people telling me I talk over everybody all the time. So I try to discipline myself, but you see, that doesn't work either. So I had 3 moments in my 3 years of being a Tesla investor, 3.5 years now of being a Tesla investor. I entered the biggest amount in March 2020 and then have constantly added to it. The one was the 2022 earnings calls. Those were calls where Elon was over optimistic. He was, we didn't even expect him so enthusiastic. And those calls were over enthusiastic. And then subsequently, we know after I think it was Q2, he then started selling for his Twitter purchase, which didn't come unexpected. We could have actually thought about that moment would come, because in October, just a year ago, he would have to pay the price for it. And also it was Q3. So that was, a moment that was bitter for me. And I want to be very clear about that. The other one is that tickles me on and off. And I mean, I'm by far not the same size than the first one, is the share sales by insiders. Management and board members always only sell Tesla shares. Now, that one I got over much easier once we had, I think it was the yearly SEC filing, where we saw how many shares they got allocated again. So yes, they're selling for their own, money needs, but they are constantly getting more shares. So it wasn't as if, they didn't end up with more shares at the end. So that one I got over. And the third point that bothered me, and that comes back from time to time, is I just wish we would have an operational COO at Tesla that has, a little bit of Elon's charisma and would communicate and would give us, regular updates. At one moment, you probably remember we had the hope that there would be a blog. It was last year when they came up with this idea that they would regularly update us on everything. And nothing of that ever happened. So yes, of course, we cannot clone Elon. So those were three moments, where I had to reassess. And all three of them, I came out and said, this is me being too worried in the short term. If I think about Tesla's mission and vision, if I think about how consequential this company is, how many different stages it has for its different products. We had today a great tweet by Søren Basher together with Brian, what's his name? You interviewed him, Herbert. Brian Feroldi, yes. So where they explained that, yes, for cars, Tesla was advancing, is now going back a little bit due to economics, but for so many other products, it's still really in early growth stages. And so the way Wall Street analyzes Tesla is just not adapted, because Tesla is not a company you can just squeeze into a spreadsheet and get your earnings per share on the bottom and feel comfortable about it. That's not how it works, right? And so when I realized that these three grievances, if you want to call it grievances, I had were what they were and I could live with them, life got so much easier. And that was end of last year. I mean, coincided when the stock was at 100, and I realized that I could actually sleep with it. Not with the stock, but sleep with myself without being, worried about it. So the journey as a Tesla investor is not an easy one. Not everything is rosy. When people throw at me, "Oh, you're just a fangirl," whatever. Jesus, no. I'm having moments where I do doubt and reassess. But none of those moments make me doubt the medium and long-term goal with Tesla. And my fear of missing out, of not being part of that journey, is by far outweighing the grievances I may have for short terms.
Thank you. Jeff?
Yeah, I have similar, like the love-hate thing. The things that concern me are, the earnings call management is, is kind of, it's erratic. And then the whole stock sales last year, and the proximity of that to certain event, that was unsettling actually as an investor. But now if you're through that, and I do agree with Alexander in terms of like the operational, man, it's hard to say on the outside of like, what does Tesla need? This is just an idea. It doesn't mean that neither of us know how to manage anything inside of Tesla better than the current team. But yeah, if there was another person that could speak to Tesla, that would be allowed to speak about on Tesla's behalf, I think that would be helpful, given the number of different things that Elon has going on at once. But yeah, those are the things I think constructively are some of the things that they can work on. We've talked about this past earnings call ad nauseum. But man, when you get to the things that you like, one of the things that I see that that really excites me as an investor is just from working in a large tech effort and working at a management level in that and working my way up through that and looking at how Tesla is run from the CEO all the way down in terms of cost focus, simplicity, focused on not just designing the greatest thing or having the greatest, product management, this will be the greatest product ever. Now we just have to figure out how to build it. The fact that the CEO all the way down thinks about the design of the manufacturing solution, the factories itself, he actually emphasizes it and says, the factories are the product. No other CEO talks like that, or even, I don't think they even believe it. And that is what is ultimately going to give Tesla an advantage over anybody else building product. I think any kind of product. Because when you ask like this Tesla, people don't talk about Tesla's supply chain. Elon is, first off, he's got a very talented leadership team, a very talented supply chain team, but he is also part of that team. And no, I can't connect any other CEO and their supply chain I can inextricably connect Elon to Tesla's supply chain, and it goes all the way to the top. If there's a material constraint, a raw material constraint in a particular company like Indonesia, he has the ability to pick up the phone and call that prime minister and help get something freed up. Can you imagine the CEO of any supplier having to decommit to Elon and Tesla and then having to get on that phone call with Tesla and step through why there's a decommit, and having the Elon on the other side of that say, well, why don't you walk me through the laws of physics of this constraint and how you're going to fix it? And then just, and so anyway, I mean, what I love about Tesla is actually how they're organized from the top down. And I know we said, well, there's other things they could be doing better, but that whole thing of basically that emphasis of the supply chain being the product, I can't tell you, every category they enter in, they're going to be able to scale, get the cost structure down, and they're going to be able to be highly competitive, if not number one or number two in anything that they do. And that for me is why it's a good investment. I think for the medium to long term.
Yeah. Okay, so it's a very tough question, right? The things you love and things you hate about Tesla as a company and as an investment. The things that I love about Tesla, if you just think about it, like in terms of, innovation, it's an innovation engine. They are business models that they've created are so brilliant. The way that they manage the organization and they execute is amazing. And if you close your eyes and just listen to the outcomes, how many superchargers they've actually launched, how many cars that they've been made, how many gigafactories they've created, what new industries they're attacking, how they're attacking it that's different than the industry is going to, all that stuff. It is brilliant. What I hate about Tesla, though, are things that will be over, the things you love about it overshadows it, right? And so there's going to be drama that happens. Elon himself in the book says that he, seeks out drama, right? He becomes a demon mode. But that's because, it's the same thing that he does that causes the success. And so, you have to just take that in part and parcel of it. And just like we said, we don't like the way he did the earnings call. And many people will point out, well, did you see this CEO when they did the earnings call? Did they, go negative? They don't. They play the book. They say the right things that everybody needs to hear, and it does well for the stock. But at the same time, this Elon that you're getting at the earnings call, while not good for the stock short term, is precisely what makes the company succeed. I agree that it's time for Tesla to have an chief operating officer that can manage the company. He's done this in the past. I'm very sure that this is going to happen anyways. But at the end of the day, how is this company being managed? It's arguably the best company that's ever been, operating and managed ever. Because again, if you look at these results, it's pretty undeniable that they're very successful. While to get there, there's going to be a lot of tumultuous scenarios. There's a lot of drama. Certainly his participating in tweets and in posts that he does, the fights that he has with world leaders. At the same time, he is the guy that's shaking hands with every world leader. So it's like this part and parcel of, okay, he's going to fight back, but in other times he's going to be the guy that's going to create the partnerships that no one else can create. So I think that's how I look at it, right? It's an innovation engine. They're in so many businesses that are very, very successful at this point. So what kinds of negative things that you might not like, it kind of pales in comparison at that point. They really do. So I don't know, hopefully I didn't answer that well, but that's, yeah.
I think you actually did. I think you really summed it up well. And I honestly love how you always, have the big vision for it. I really appreciate that, Herb, because we get sometimes stuck in, day to day. I have a bet open with one of you, I'm not going to say whom, that by the end of the month, so that's in 5 days, nobody will talk about the earnings call anymore. And I think I'm going to win that, because already today on the 26th, nearly nobody talks about that earnings call anymore. So 5 more days to... Yeah, well, we did, but that was it. We won't talk about it anymore. And I think we should talk about the earnings call that Ford just had this afternoon. Because while we're recording this, I don't know whether you've seen that, they have announced that they are pushing out indefinitely $12 billion of investment that they were going to invest in the EV manufacturing. Now, this adds to GM. Jeff, remember that much better than me, probably of one of their EV factories that they're delaying for at least a year and a half. I mean, they are giving up. They are giving up, and their way of surviving will be to license it. And who can they license it from? Just wait. It's going to come.
Yeah. When you set a capital plan for your company, you need the product plan alongside of it. And if the economics don't work, what unit economics are is you basically stack up every single cost element is needed to make that product and then have it land in front of the customer. And when those unit economics don't work, the capital that goes alongside of those unit economics, why would you buy it? Why would you buy it in scale if it's not going to work? So I think they've got more work to do on their next generation of vehicles, and they actually don't even know what the right CapEx is to buy. And I don't want to accuse anything, but it seems like they're all kind of working together, including with the media regarding that, EVs, the demand for EVs is suspect. There's clear data that says the demand for EVs is not. Looking at the adoption data, I don't know how anybody could discount that 5 to 6% of people in the U.S. bought an EV last year, and now 8% are buying an EV this year. And all the surveys say that, that 30 to 40% of people would purchase an EV as their next car. So none of the data supports what they're saying. What does support it is that people don't want to spend $68,000 on a Cadillac Lyriq when there's a Model Y at $43,000 to $48,000 that's actually a better product. That's what's fundamentally happening, and this is why they're capitulating. And you've seen some of them even talk about it in their earnings release. Like Porsche, for example, and one other OEM talked about, or Mercedes talked about, the pricing challenges in EV. So they don't have the solution.
Challenges.
Yeah, they don't have the solution. So now they're saying that there's a quote unquote demand problem.
We're going to hear more and more of this. They're going to attack EVs. They're going to say that nobody wants them. They're terrible because they don't have a solution for it. Here's what Alexandra was talking about in Ford's earnings call. They basically announced that the strike cost them $1.3 billion in lost production, and they're delaying $12 billion in previously announced EV investments. And of course, they missed their expectations. And this is where it comes full circle back again, is that you're going to have many of these OEMs, and they're going to say, look, our EV ambitions are gone. We better attack EVs. Some of them will partner with Tesla because they can't deliver. So I think that, and by the way, I'm just even more bullish now, aren't you? It's like, my God, the world is wide open. Even if you say that, Tesla will only get 20% of the EV, the market at the end of the day. Well, now it could be way more than that because no one else can produce, even if they wanted to.
Affordable prices, because that's what's going to kill them. If the EVs would be expensive, that's one thing. But Elon's strategy of making them cheaper and cheaper and cheaper again, and yes, I know, I hear Wall Street, I hear them cry, but by making them more and more affordable, it is clear that he's actually forcing these OEMs to Tesla's mission because he wants them to go to electrification. He will help them. He will license it. I hope he doesn't do it only for humanity, but also for our margins at the end of the day. But by making them affordable today and more affordable tomorrow, he is forcing these companies, if they don't want to invest themselves, to license it. There's no alternative.
Well, imagine when bots are here. These guys are dealing with unions. That also going to have bots that is going to be able to do things even faster, quicker, cheaper.
That's exactly
I think
it.
This is a moment in history that we'll look back on. You know, this transition to EV. So just think about it in numbers. You know, so people have the SAR for the U.S. Basically the retail number somewhere between 15.5 and 15.7 this year, and with an 8% EV adoption rate. So it's something under, 1.3 million EVs or so. And Tesla's doing half of that. They're basically doing 650, 700K maybe in North America. We'll see how the numbers come out. But then next year, let's say we're at 16 million units again. By the way, none of the automakers say they're seeing, in the US, say they're seeing sagging demand for next year. So now they're talking about the adoption rate being 11 or 12% next year. And if it's 11 or 12% and 16 million, now you're going from 1.3 to like 1.5, 1.6 to 1.8 million. Somebody has to build and deliver those cars. Those people want EVs. So I don't understand
profitably.
Yeah, and I don't understand the argument of why we don't think that capitulation of these suppliers doesn't mean more volume for Tesla, the company that has some profitable supply of product. I don't understand why the two.
Well, think because Elon's not going to invest until the macro improves, and so it's kind of like a stalemate for now.
But they are losing so much money. They're losing so much money. I think this quarter it's 37,000. They're losing on each Mach E. 37,000 is the price of a Model 3 now. Okay. Rather than them building it, they may as well just put for free a Model 3 in front of their clients and say, go away with it. So they are so stuck. I mean, I feel for them, but they're really, really stuck. And it's between not only two, but multiple hard places. Their dealers, the fact that they can't deliver them, the fact that they hope that ICE will survive a couple more years until at least they're going into retirement. It is really tough for them. And by admitting now that remember just 6 months ago, it was all this PowerPoint and we don't do this and that electrification company and this, and now 12 billion. I mean, count to 12 billion, that's real money. Okay, indefinitely delayed. You know what that means? Just gone. It's not going to happen anymore.
And remember this, we've been talking to you on this show about the two different supply chains between Tesla and Legacy. What were they celebrating 3 or 4 weeks ago? Oh my gosh, Tesla's at 50% market share and they're losing market share in North America. The competition is coming. And not more than 3 weeks later, the whole series of them have capitulated and said, hey, guess what? What wasn't in those numbers is that, yeah, we shipped them in the dealerships, but the inventory doubled. The inventory doubled. There was 40 to 50 days of inventory in the beginning of the year, and now it's 100 or more. So that's what's actually happening. And the fact that we don't have financial media or people that can do some first level analysis and understand what's actually happening is a little bit concerning. But it just shows you that if you can do the proper analysis on this stuff, you can actually get ahead of it and understand what's actually happening out there.
You're the one that pointed out.
They didn't even know what was happening to them when it was actually happening.
Jeff, you're the one that pointed out in your X account, you've got so many tweets that you point out exactly how much money each of these OEMs are spending in advertising to CNBC, to TV. And so they're not going to stop that $200 million that they spend on CNBC. And so CNBC and the attacks will continue to Tesla and EV.
But that's their only way they can survive. I mean, it's like bribery. There is no other word for it. That's the only hope they have, is that the story continues for a couple more quarters and a couple more quarters while the whole thing falls apart. But I can tell you, that FSD licensing deal that Elon referred to in the July earnings call, this is becoming imminent. They have no other choice. They need to have cars that they can sell.
Okay, so now I'm confused again. I mean, I'm a big believer that FSD license is going to happen, but why? It doesn't make sense. Your logic didn't make sense there. In this scenario, it's a licensing not for FSD. That's not going to help them today. What they need is a licensing for powertrains or
for everything.
Some sort of for everything.
Yeah, for everything.
Put my badge on your car.
But I mean, don't you think that in the end, OEMs will have to purchase from Tesla, and maybe if there's a second provider, who knows, the powertrain, the operating system, the FSD, and then build the rest. The wrap will still be a Ford wrap, or I don't know what you want to call it, wrap, whatever, the chassis or whatever you want to call it. That will still be theirs, but everything that is making the car efficient and whatever, they rather have a fixed price deal or a variable price deal if it's a licensing on mileage or on time with Tesla than having to develop it themselves. Those 12 billion they were supposed to be developing. They can build cars. We know they can build the wraps, but all the things they can't build, they better buy from somebody.
Yeah, one of the issues is all of this is inextricably linked. I think Lars, the VP of engineering for Tesla, brings a bottle of your favorite liquor to your desk if you can shave X amount of weight out of your assembly as an engineer, because this is what it all comes down to: is can you get the mass of the vehicle down, and so you don't need the size of battery pack that's needed. You can take the whole cost structure down. That's just one of the things that Tesla masters very well. So this system engineering aspect of it is a pretty big thing. I do agree with you that I think there is a components business and there is a licensing play, but at the system level, you've got to get this right. And I think they're honestly really struggling to get it right. And this is, I'm now starting to be a little bit concerned about, is there going to be a licensing partner anytime soon? We'll see. But I mean, because if they're pulling back their investments in EV, well, the question is what's the time duration? What is 12 billion for them? I mean, Tesla spends 7 to 9 billion in capital, and that's spread across other components besides just their factory capex. So this may be a couple of years of capitulation out of Ford. But
at the same time, they did sign with UAW a deal that, I mean, I don't know whether it's modest to give a 25% pay rise, which actually is much more if you look at the fine print. So if they would be in a situation where they would think we're closing doors anyway, I don't think they would have signed a UAW deal. So I do think they see a way forward. But obviously, it's not by investing 12 billions into research and development and factories for the EV trains.
This is why there's going to be a partnership sooner than we realize, because Tesla can only partner with 1, 2, or 3, and then the rest are out of luck. And so they will partner with a lot more. Of course they will, but let's say Tesla, the very first one comes up and says this. First of all, brand recognition. All of a sudden, Ford is having Tesla help them, so they must be as good as Tesla, and then they're going to survive. Then maybe another one does it. Okay, by the time the third and fourth, Tesla can do it. Sure, they want to do it, but what? 4 years from now, 5 years from now, so by that point, they're dead. It's over. They won't be able to do it. And so that's why, as you do these calculations, the first one's going to come out and need to come out first. We all know that Hertz, as a rental car company, is partnered with Tesla. Yeah. Everyone else is doing EVs too, but you just don't even know it because it did not grab the kind of the society's mind about this. And this is what's going to happen. There's going to be one.
Jeff, I'm nearly ready to do another olive oil bottle bet with you. I think it's sooner than later, and I think it's Ford, and I would even say it's still in 2023.
Whoa!
For what?
Crazy.
Where's the surprise?
Ford announce something, and you said it will be. You think it's later now, so I don't
know if well, you know what? I mean, it's going to take them a couple of years to integrate EV or FSD anyway. So now, as the more I thought about it, they may still announce something, but
they need to announce sooner than later to get started.
He just doesn't want to bet with me. There's just no. You don't want to give me the glory of fine. I lose them usually, right? So
you're crazy to say 2023, but it's going to happen sooner than we think. Elon
we
said,
still have
right?
I don't
Even
know.
if he said specifically, he tweeted out, said if Ford started now, it would take them 3 years just
Sure.
to be able to
That's because that's
implement
how
the
OEMs function. OEMs are now working on the 2026 model and even 2027. So that's not a surprise for me. But the stock price, that's the day the stock price will move. Seriously.
Depends on what kind of partnership. But yeah, FSD licensing, pop, big time.
Oh, EV train the same.
EV transit, pop, big time. Yeah. That's why. So then why is it the beginning of this call when we were talking about BP partnering, you're like, it's not a big deal. I'm like, it's
because this is the gas
symbolic,
station. I don't want to go to a stinking gas station to charge my car.
symbolism.
I'm
first
just my
of many.
princess. I'm just my princess self.
But this is this conversation is what what attracted me to Tesla in the first place. Is everyone is focused and talking about cars and their verticals or the number of adoption curves that they can disrupt is just it's wild, and that's that's what like the total addressable market is what I focus on anytime I have a conviction shakeup. I just zoom out, and every time you do, you go, well, what else? What's the
energy, bot, Jack,
right.
and everything we don't know yet. And you go like, okay, forget about the COO, forget about Elon, just go and do it.
Exactly. And Jeff used a word. He said believability, and that just stuck, right? It's what they did by it's like a Trojan horse. They sold a bunch of cars, and the market wants to call them a car company, but they're definitely a tech company, because like look what we're talking about is all these other people adopting or other manufacturers adopting Tesla's tech that they've developed because they can't do it profitably. So and this just the last note that I had was like this disruption. What's next, right? Like, I already mentioned it, but like, what is next? Now we're talking about bots, and I've been searching for that thing that will make me not panic sell, and it just comes in like, what if energy? You just said, oh, they sold 100 million. Well, what if those numbers turn into billions? And what if they sell, like you're saying, powertrains or whatever it is? So that's it's really good to think about the long term when times get tough. So
That's a good point. There's going to be we're at any moment we can hear a big partnership or a big sale to a government for energy or for bots or for maybe bots a little too early, but for any of these things we're talking about, because any moment another partnership down the line.
The other thing I was just thinking about is just sitting here is the IRA next year. Mm-hmm. I mean, the government did not have a plan set up where Tesla is just going to literally own this thing, and
all of it.
I know they're going to give hybrids. They're still going to give hybrids undue credit. And I think that's where the automakers are going to go. But like for them to produce, if they're losing $36,000 on a Ford EV, what is them getting $1,500 or $3,000 back as a credit for the battery do for them? Nothing. So, and if they're saying they're not going to scale it, what does that mean? And what does that mean for all the Department of Energy loans that are going to build these facilities? So I think there's a lot of things here to unwrap. But this whole thing, I hope Elon could actually help. He's very good at he can clarify things, I think, pretty well. Just unwrap this whole thing about that people don't want EVs. There's a demand issue around EVs. I hope that he can clarify that, because the issue is they don't want a $68,000 Cadillac Lyriq or an $80,000 Polestar SUV. They want the $45,000 or less Model Y. And I hope they can just have a very plain and simple conversation about this and kind of like push through it. But Tesla has to put up the numbers. I think that's what it has to come down to. Is I hope there's this intense focus of, you don't think people want EVs? I hope they push for 500K in Q4 and a bigger number in the first half, and really blow it out. Because I think it's important. I think it's important for the existence of EV and the adoption of EV that this cabal is broken up. Yeah, they had Mike Wirth, who's the CEO of Chevron, on CNBC saying, yeah, I don't think people want, there's a demand issue.
Yeah.
So they're all saying the same thing.
I'm going to say that.
And it's you need somebody like Elon to break that up. Fake
What
news.
I was just about to say, though, that's the issue, is that Elon just said, sorry, Alexandra, the earnings call, he said that they're not going to put pedal metal until he sees what happens to interest rates and macro. So it's a perfect opportunity for Tesla to go and kill if they wanted to and just grow and expand now. But he has to be careful because he doesn't want to go, too bold about building too fast.
No, but
So
I think
everybody's
on
slowing down.
existing models, they can increase still capacity. And if,
Right. It was
I was never bothered.
Correct.
Exactly. I was never bothered with this margin reduction. I know it drives the Wall Street people crazy, but if we can reduce the margin sufficiently, so even if we go into the 12th or 13th, to get those prices to a point where we just bring them out and conquer the market at a moment where the whole competition is
struggling,
not there, is just struggling, is building them at a loss, and rather doesn't want to build them and is trying to tarnish the image of EVs because that's the only thing they've got left. I mean, my gosh, that's not a lot left. I can tell you that. For them, I mean, if that's their best bet, phew, that's not going to last long. If we can have Q4 and the beginning of 2024 with good delivery numbers, no matter the margin, I think we're there.
Maybe we need to invite people who do care about the margin.
I do. I mean, I'm most happy to negotiate and talk to them.
We're too insular.
I mean, I care. I mean, I think we all care about it to different extremes. But it's more of taking this look of like, instead of being in this 90-day treadmill for each quarter, just looking back and saying, look, the moves that Tesla made in 2023 allowed their supply chain to maintain and grow scale and allowed the EV adoption curve to continue to grow while it collapsed on top of its competition. And I think we're going to look back at this move and say, like, this is a brilliant move because they may go into, I mean, I don't want to be so bold to predict this, but on January 1st, if 3s and Ys are 10 to 20% cheaper at the point of sale, who's to say that they may not need to increase prices just based on demand and the fact that there aren't other EV product available in mass supply? So anyway, there's a number of scenarios. There's a number of ways this could play out. I mean, the most
interesting.
Yeah.
Jeff.
So
I never thought of that because Elon does want to grow their cash, and he got $3 billion to protect this cash hoard. And so maybe they'll keep the price the same, sell it $7,500 cheaper because of the IRA at the point of sale. Margins go up. Maybe he might go that route first quarter of 2024 to bolster more cash in. Wow.
they need the cash to really expand beyond this, 2.5 million or so. So they're going to, not that they have a cash problem, but they're going to need cash to expand and then fund all these other activities with the bot and Dojo.
Right.
So yeah, I mean, Tesla is electing to put money into GM isn't investing in a Dojo or a supercharger network or anything like that. So Tesla is choosing to put their free cash in this. Tesla could be throwing off $2 billion of free cash easily, but they're investing in these components that these other companies don't have. And when one of these option plays hits, it took the supercharger network 10 years, 12 years to play out. As these other ones start hitting, we're going to look back and say, these are pretty good. They're not going to bat 1,000. They're not all going to hit, but it only takes a couple, I believe.
All right, let's do this. Thank you guys very much. Follow everybody here. Tesla Boomer Mama, Alex, Xander Sky, RSX Alex, and Jeff Lutz on X at the Jeff Lutz. This is CyberBulls. We're on every Friday, and we also have a space every Tuesday at 3 p.m. Pacific time on X.